This is market wrap for August 5th, 2020, Wednesday. Stocks have ended the day sharply higher. The Dow closed up 373.05 at 27,201.52, and the S&P 500 closed up 21.26 at 3,327.77. Mortgage bonds ended the day lower, 19 basis points. Towards the end of the day, mortgage bonds started to sell off. Of course, this could happen because they've been riding an upward trend higher for quite some time, and we basically have been floating through it. Bonds pulled back off resistance and put lenders in a position to reprice. Thus, we've begun to lock. Economic news. The ADP jobs report showed that there were only 167,000 jobs created in the month of July, which was much lower than the 2 million expected, but that doesn't tell the whole story. The report for June had a huge revision from 2.4 million to 4.3 million. Because of the huge revision, stocks held onto their gains and bonds remained much lower. Early this morning, the Mortgage Bankers Association released their mortgage application data for last week, showing that overall application volume fell by 5.1% from the previous week. Purchases were down 2%, but on year-over-year basis are still 22% higher. That's a lot. Refinances decreased by 7% last week and are up 84% year-over-year. Refinances made up 63.9% of all transactions, down from 65.1% last week. Interest rates decreased from 3.2% to 3.14%, which is 87 basis points, or about 7/8% lower than this time last year. And what a difference 7/8 makes. Remember, the MBA rate is for last week and always includes a fraction of points, in this case, 0.39. Upcoming events, tomorrow morning, initial jobless claims will be released. The market is anticipating another 1.4 million new claims, meaning 1.4 million people filing for unemployment benefits for the first time. We also will be watching to see the numbers for continuing claims and pandemic unemployment assistance, PUA claims. I'd like to talk a little bit about the technical picture. Mortgage bonds pulled back from resistance at 103.688 after a solid week-long rally. There are a few negative developments on the charts. Bonds, which were in overbought territory on the stochastic chart, had a negative crossover, signaling an exacerbated move lower. Additionally, an quote evening star pattern unquote has formed on the candlestick chart, which typically means there is a move downward pressure to come. These are some of the reasons that we went from floating to locked. Hope you have a wonderful day. Hope to see you next time. Thanks a lot.